Hey everybody, welcome to Trading Capital's exclusive daily analysis. Today is currently October 9th, and as we kicked off yet again another trading session, it was one that was certainly wild. This is the 10-minute intraday chart of the S&P 500. First things first, this is where we closed on Friday. We actually gapped lower today on the gap open, had an initial bounce within the first 30 minutes, sold off, took out the opening low, and then from that low, the market actually just started trending much higher and actually turned green and closed near the highs of the session. So what does that look like on the daily chart of the SPY? Well, the SPY closed above Friday's high. That is extremely bullish. Why is it extremely bullish? Well, the fact that you got above Friday's high after the market was actually negative shows bullish sentiment. And one thing that I'm watching here is for a confirmation break, which we got today, above this little bit of a downtrend channel. So since we got a break above this little downtrend channel, where does that leave us? Well, the next big resistance is the neckline of the head and shoulders. This is basically going to be the big level that everyone is watching. Why is that? Well, if you get rejected at that, there's a potential downside target of 407.25 based off of this head and shoulders pattern. Now, if for some reason you can get a daily close above that, then it negates the topping formation, and actually this could become a failed bearish pattern. And we all know that there's large moves come from failed patterns, and if this is a recapture by the bulls, you will likely see the bulls make a strong push into this lower down sloping trend line. So that's the big level. If we can get a daily close above the neckline, then the bulls will likely push it up into this down sloping trend line and potentially even higher from there. One of the reasons we also kind of stopped at this resistance point today is if we simply throw on the 20-day moving average, this blue moving average here, you can see we're bubbling up into that. So not only do you have the neckline of the head and shoulders, but you'll also have the 20-day moving average just slightly above the price action today. So we closed at 432.29, down 20 cents in the after hours, and the 20-day moving average is sitting at 433.65. All right, let's move along. QQQ, tech heavy sector. The Qs are holding up well. You can see on this chart you have a beautiful symmetrical channel. I think it's very likely we head to the top of this channel. And then what's going to be interesting is this a weekly flag that is forming? This could be shaping up to be a weekly bull flag break. If this weekly flag pattern breaks to the upside, doing a simple measured move from this flag structure, the lower end to the high end to the recent pivot low, that suggests, now this is a weekly pattern, so keep that in mind that it's not expected to get there in 1 or 2 weeks or 3 weeks. Often it takes a little bit longer than the consolidation period. So if you look at this consolidation period, you've been consolidating for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 weeks. So if this is a true breakout, there is a potential that the NASDAQ over a 13 to 26 week period can rally and make new highs all the way up to 452.97. So definitely on watch for the QQQ. The daily chart at the minimum, if you're trading it, I think we can push to the upper end of this channel, and that's going to be your big resistance. If we get a straight shot push into the upper end of this channel, that becomes slightly overbought, and you want to see bullish consolidation. You want to see sideways chop consolidating before you get the next leg up. Now, what was interesting today is you also have the IWM negative, deeply negative, and then it closed positive, up 0.58%. So there's two trend lines I want you to pay attention to. Let's look at the weekly chart of the IWM. This is your breakout trend line, major pivot high to your consolidation, failed breakout zone, bearish consolidation, turned bullish, breakout, retraced back down to the lower trend line. Okay, so you've had a weekly close on that trend line, no confirmation. You have not confirmed a technical breakdown. As far as I'm concerned, this is hitting mega support. Not only do you have this down sloping trend line, flip back to the daily chart. Look at this upsloping higher low trend line. Here's your low, higher low, and this could be shaping up to be a higher low. Interesting enough, if we actually remove this trend line, you can see that we got a bearish break of that trend line on the daily chart. Never confirmed, never confirmed, never confirmed. And now it looks to be, as of today, you just recaptured that key trend line. So what I'm watching for is if this bearish pattern turns into a failed bearish pattern. Because if it does, we're going to see a move likely up to this resistance point, 182. And that would be a pretty substantial move in the Russell, 4.58, especially some of the mega caps or small cap stocks that have been more oversold as of late. So definitely keep your eye on small caps because I think there's a lot of alpha and room to run in this particular sector of the market. What also transpired today? Well, there's obviously the Israel war going on that gave defense stocks, utilities a big boost. You had the likes of Lockheed Martin gapping up tremendously, up 8.93%. You had Palantir, which I day traded, up substantially 6%. You have Raytheon RTX. You have AXON, another one. And Raytheon actually looks very intriguing from a technical standpoint, extremely oversold. So it could get some more momentum to the upside if it starts to really run with, and especially if it has a positive market backdrop. AXON. And then you also had strength in energy yet again. Energy outperformed. Why? Because oil gapped up on this war and basically Israel and maybe more of the Saudi news and Iran news. So big gap up on oil, up over 4% on the session, 4.17. Oil's interesting because you're now above this key resistance zone. If oil can hold above this resistance zone and consolidate above this area, it could be a potential long setup to trade all the way back up to this double top 92 to 94 area on oil. So watch it closely because, again, if oil starts to make another trend higher, although we've got a decent 5-day pullback in the energy market, if oil starts to trend higher, it's still going to skew that CPI energy component to the upside, and that's not very positive for the overall CPI and yield market. Although when you look at yields today, the yield market fell. Look at the 20-year yield getting absolutely slaughtered, down basically 2.98%. Look at the 30-year yield, down tremendously. The 2-year yield dropping below the 50-day moving average. Now there's still a lot of technical support, but is this trend finally starting to roll over? Are we getting a softening in yields? Or is this just kind of more of an oversold or a parabolic pullback, I should say, an overbought pullback? Time will tell. Obviously, the 10-year is the more important one that I'm watching. Is does the 10-year lose this this resistance trend line? You got a weekly close above it. You have not confirmed yet, so this could become a failed breakout, and we could see more of a deflationary force or disinflationary force take hold in the market and push yields down. But obviously, that's going to be very, very pending on what oil does, what the energy market does. Take a look at natural gas. Natural gas is just tremendously, tremendously powerful. We banked tremendously on our Boyle position, over 17% with members. Definitely look into some of our alerts. I think nat gas is now into resistance. Full disclosure, I picked up a little bit of a day trade short in KOLD when nat gas hit the top end of this parallel channel. You can see it actually pierced it, but we have hit near-term resistance. Why is that? Well, a couple factors. You have this major pivot low that we tagged, and you also have this double parallel channel that we're hitting in a very extended state. It is slightly overbought on the daily chart. If you throw up the RSI, RSI is in that elevated territory. So I expect probably a pullback and a softening in price back down to this lower boundary trend line. So it is upsloping, so maybe it's around 324, 330, give or take. And then if we see some harsh selling, I would actually love to see nat gas pull back down to this previous resistance zone. So notice how nat gas was rejected here at resistance, nat gas was rejected here. This is your breakout. So this is ultimately your big support level on nat gas. If nat gas retraces lower to there, I will yet again be a magnificent buyer of this trade because I do think that nat gas is going to go higher. Let's look at the dollar. So the dollar has had a multi-day pullback, 3 or 4 days of pullback. You're still trading above support. So notice how yields collapsed today and the dollar reversed. What did that ignite? That ignited a rally in gold. Gold, I think, at the minimum is going to retrace back up to 1900, the low 1900s, before we start seeing some more sellers take place. I'm really skeptical about gold despite being fully long in the mining sector. I think gold has broken this parallel channel. It likely gets a retrace, and that's going to be the big level. If inflation resurges and comes back, you're going to see gold go down. I actually have a downside target on gold of around 1695, believe it or not, and then potentially even all the way back down to a pierce of 1600, tapping that high 1500 mark. That's kind of what my technical price action is showing. It's not the base case getting down there, but it's certainly a case. GDX absolutely ripped today. I am fully long at this 25.99 level, already securing and locking in profits. I think GDX could get a retrace to the upper end of this channel, but it's really going to be pending what oil does, considering that miners have a direct confluence and a direct correlation to what energy prices do. Typically when energy is soaring and roaring, miners start to see more downside. Obviously, if the dollar starts to shoot up, that's going to hinder gold, which will also hinder the miners. And typically, if you do see a weak market, miners typically also start to sell off. But it was interesting to see yields collapsing today. The market went from negative to positive, which is still showing a direct correlation where specifically tech stocks, small cap stocks like the lower yield environment. So notice how the market was red when yields were red, and then the markets flipped green as yields started to continue to soften up even more. All right, finally, let's cover Bitcoin, BTC USD, because I haven't touched base on this chart for quite a long time. Bitcoin right now is actually looking bullish. It's looking like it wants to break this inside bar consolidation and break to the upside of this channel. Now, one thing's for certain, is on the weekly chart, you have to be extremely careful. Why is that? Well, we have a weekly inside bar bear flag. So this is where technicals get tricky, because you have a bearish weekly pattern, but you have a bullish daily pattern. So which pattern is going to trend higher? This is why it's important to look where the stock market is, what the underlying crypto mining stocks are doing, like MARA. Often you'll see these crypto mining stocks try to front run and form a bottom before the actual underlying asset itself. If you see MARA, MSTR, MicroStrategy, HUT, Coin, a few of these other crypto related mining stocks start to bottom and break out, that could be a sign that Bitcoin is actually going to make a bullish move to the upside. And I would not mind if Bitcoin actually made a pop to the upside, because I do think that there's a decent short level. If we were to challenge this double top or pierce it and go to about 32.7 on the charts, I think that would be an epic short on the Bitcoin price. One of the reasons why I think Bitcoin can actually get another little pop is you have this bullish divergence. You have the RSI in ascending pattern well above the 50 zone, which typically bullish moves happen above the 50 daily moving or the 50 zone on the RSI. So I'm a little bit more optimistic based off of this pattern. Full disclosure, I don't hold any trades in Bitcoin right now. It's not a setup that I will trade, but I do think that if I had to lean one way, I think Bitcoin's going to pop out of this little bit of a micro bull flag and make one more little ascent higher before I think we start to see a little bit more of a selling pressure. On that note, if you're confused in these markets, a very tricky place. We've had wild swings, red to green reversals, green to red reversals. Definitely check out tradingcapital.ca, where we'll be able to help you with your entries, your alerts, your exits. And we've certainly been profiting as of late in this market. And it's good to see that we're finding winning opportunities consistently throughout this market environment. On that note, thank you all for tuning in. Please give this video a big